Somebody's messing up the Wall Street sandbox, and it's a Robinhood app, and things are really changing on Wall Street. So I invited the host of the Big Biz Show, Sully Sullivan, my pal. Sully, this is great. I love to see chaos on Wall Street. Why?
Because you love watching a slow-moving train wreck. I know you really well, Carlos. I know you better than most, and you like to watch these things happen the same way I do. So I know exactly what the attraction is here, because you're watching the mess unfold right in front of your own eyes.
Well, so Robinhood is this app that basically wants to democratize, let the little guy in on what the big hedge fund guys are trying to do.
Right.
And it's like the little guy kicking sand in the hedge fund's eyes. I mean, tell me a little bit about the detail of buying stocks like GameStop and AMC. What's the point of that?
Well, let me tell you, I guess the first thing you need to understand, and everyone needs to understand, is what it means to short sell a stock. Mm-hmm. Now, stocks are the only asset that you can sell before you own it. You can't sell a car before you own it. You can't sell a home before you own it, but you can sell stock before you own it. It's called short selling. So basically what you're doing is this. You go to your broker and you say, I want to short 100 shares of XYZ. And you're basically borrowing those shares for a few days. Broker's selling those shares and putting the money in your account. Now, you're going to deliver those shares in a couple of days. Mm-hmm. Let's say those 100 shares cost $1 a share. So now you got $100 in your account. So you just shorted XYZ company and you got $100 in your account. So 3 days later, the broker says, hey, time to deliver those shares. Well, if the stock price has gone down from $1 to 50 cents, you buy those shares at 50 cents, broker's got his shares, and you just made 50 cents on or $50 on that deal. Mm-hmm. So that's what's called short selling. Now, why would a hedge fund or a professional investor short sell? Well, let's look at GameStop. GameStop is a video game retailer. Like most stores that still sell products in their stores, it had a hard time in COVID, obviously.
Real hard time.
Moved online, right? So what did the hedge funds do? Well, you and I, when we buy a stock, we like to buy low, sell high.
Yeah, well, we're retail buyers, right?
Right. Well, when investors try to short a stock, they like to sell high, buy low, right? It's the exact opposite. So the simplest answer on what's happened here is that this stock, GameStop, has become the central game piece of a financial power struggle between a group of amateur stock traders who yell and scream on Reddit, in this case, and against a major hedge fund. In this case, it was Melvin Capital. And that the bottom line is that this internet activity, just to your credit, just like you said, Carlos, is a result of everyday investors thinking that the system is gamed against the little guy. So think about this. So suddenly you got all these big hedge funds that have got hundreds of millions of dollars betting against GameStop. And it was a good bet. GameStop was dropping like, my self-confidence at the 6th grade play. I mean, the bottom line is GameStop was probably a good thing to bet against. Well, this Reddit group had 2.8 million people, Carlos. They crowdsourced all of these people together and said, you know what? I know what these guys are doing. We're going to go buy that stock. Wow. And as they purchase that stock, what happens is when a short seller is trying to cover their shorts, I know it sounds bad, but this is exactly what they're doing. They got to deliver that stock a couple days later. Well, let's say that, remember that 100 shares of stock you bought at $1?
Yeah.
Well, what happens if it's at $5 when you have to deliver the shares?
So these people are buying it up, right? They're making the price go up. They're buying it up.
That's exactly right. On that one day, by the way, that's what's called a short squeeze. That's why I wanted to explain. Yeah. That's a short squeeze. The hedge funds and professional investors got short squeezed by $1.6 billion on Wednesday.
Wow. No wonder they're mad.
Well, yes. And the hedge funds lost money. But here's the problem. At the same time, all of these amateur investors were investing through Robinhood, investing through online portals like Fidelity and such like that. Right. And the problem is that for the life of me, I don't know why investors, or I should say people that enter the stock market for the first time, they do it without practicing. Now, would you go on YouTube to learn how to drive a car then expect a driver's license? No, you wouldn't. So what happens here is these guys, and even though GameStop went up, it didn't go straight up on Wednesday. It went like this, right?
Yeah, I've seen the graph. Yeah.
What happens if you bought at 6:30? I'll tell you exactly what. If you bought at 6:30 in the morning on Wednesday, and you put $1,000 in, you had about $10 by 7 o'clock that morning. Now, most people will sell when that happens. Yeah. Had they stayed in, they would have made some money. But as a result of that, a ton of amateur investors lost a bunch of money. And that's the problem with accessibility like Robinhood. I think it's great. Keep in mind, Carlos, and you and I have talked about this many times over the years, only 43% of us participated in the stock market pre-COVID. Right now, 58% of Americans are participating in the stock market.
Yeah, because you can stay at home and do it on your computer. But the thing about it is, who wrote these rules that you can short a stock and you can borrow? I mean, what kind of nonsense is that?
Well, it's been around for a long time. And again, I think it all sums it up when I say, I can sell this asset before I own it, but I can't sell any other asset before. Now, and it's amazingly risky, because if you buy a stock, Carlos, let's say you buy a stock for $100 a share, the most you could lose is $100 on that share. But if you short a stock, the downside is infinity. Because if it goes up, there isn't a top number, and that's the problem. And that's what a short squeeze and what happens when like what happened Wednesday is these hedge funds were buying in as fast as they could, driving the stock price up, which was hurting the next hedge fund guy. The other piece of this thing that we can talk about another time is the derivatives market, the options market. There was a lot of calls coming in, and basically a call is a contract that gives you the right to sell a stock at a certain price. Well, with each call representing 100 shares of underlying stock, there were billions of shares being sold between a couple of different times, 6:30 to 7 o'clock, 10:30 to 11 o'clock. And that's how Johnny Lunchbucket and Cindy CEO, the normal investors, that's how they lost their money. But it's a complicated story, but it's a lesson to be learned. And that is
really is.
Well, you can, and by the way, you can learn to deal with the stock market without losing a nickel if you go on ninjatrader.com or you go to Thinkorswim on TD Ameritrade. Those are paper trading platforms where you just learn how the stock market works before you put real money into it.
People don't like to do that. What reminds me of Gordon Gekko in Wall Street when he said, greed is good.
Greed, for lack of a better word, is good.
Yeah,
but I say buyer beware, right?
No, you're right. You should. I've told you a million times, the market runs on two emotions, fear and greed. And this is what, I went on that Reddit feed, by the way.
Oh, yeah?
To look and see what it was. And there were guys posting things like, hey, I just put my rent on my credit card. I'm buying GameStop. I'm thinking, oh,
wow.
I mean, it's just it's a scary thing for me. I will tell you this, as you know, I own 2 millennials. And here at our studios, we employ 6 millennials. So the 8 of them got together on Wednesday and said to me, you need to tell people this on TikTok. Now, apparently TikTok's a social media thing. I have no idea what it is.
You're not a good enough dancer to be on TikTok.
I'm not. Well, but we did create a channel starting today called Sully Speaks Money. And I explained this entire thing. I said, look, if I just get to show up and talk and you guys shoot me, I'll do that stuff. We'll see what happens.
All right, Sully Sullivan from the Big Biz Show. So good to talk to you. Thanks for setting it straight. All right.
All right, bud. Talk to you soon.
Thanks so much.
Take
care.
Care.